The SpaceX IPO isn't just a financial event, it could fundamentally change the entire stock market. We are on the verge of what could be the biggest IPO in modern history, but this story is about more than just rockets. Within the next few months, millions of Americans could become SpaceX investors without ever buying the stock, or even choosing to. The financial system may buy it for them automatically. SpaceX is preparing for a valuation approaching $2 trillion. This is a story about that massive number, passive investing, and quietly changing rules before this history-making IPO. Most people see SpaceX as a rocket company, but the core business is far more compelling and profitable than the rockets themselves. Rockets are the spectacle, the attention machine, but the real business is Starlink, a global satellite internet network floating above the Earth. Unlike rockets, Starlink makes serious money with millions of users, government and military contracts, and remote internet access. SpaceX is becoming a private telecommunications empire in space. Here is where the story gets complicated and potentially dangerous for the market. A company valued at nearly $2 trillion is expected to lose billions this year. This raises a dangerous question. What exactly are investors paying for at these massive valuations? At these valuations, people are no longer investing in current profits. They are investing in the belief that Elon Musk can dominate space, AI, communications, and the future itself. That's a powerful narrative. Narratives become dangerous when markets stop questioning them. History shows us this in dot-com stocks and housing bubbles, where price eventually disconnects from reality. Now, let's look at the strange part of this story, how the system itself may influence the IPO's success. NASDAQ recently introduced new rules allowing companies like SpaceX to enter major indexes much faster. This change matters immensely for the IPO. Once SpaceX enters indexes like the NASDAQ 100, index funds and ETFs are automatically forced to buy the stock. Millions of retirement accounts suddenly become buyers without choice. Critics argue this creates artificial demand. Automatic buying pressure could surge the price rapidly, regardless of the company's fundamentals, meaning the system supports the valuation. The true lesson here is about the hidden side effect of modern passive investing. Passive investing doesn't ask questions, it simply follows the rules. When trillions of dollars move automatically, small rule changes become extremely powerful. Modern markets are no longer driven entirely by humans, but increasingly by systems, algorithms, indexes, and automated capital flows. SpaceX is the clearest example of this collision. Regardless of whether SpaceX becomes a success or a cautionary tale, this IPO reveals a fundamental shift in modern finance. Markets are no longer just places where investors choose what to buy. Increasingly, the system is choosing for them. The question stops being, is this company worth the price? The real question becomes, what happens when nobody is left asking that question anymore?